Good afternoon. It is January the 26th, 2017. Time to kick off our wrap up for the day and take a look at the Globex session and what we might expect to see when we come into the markets tomorrow morning. We'll start off with our usual disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So, we came in to the E-mini this morning. We were buyers. We had 90 to 92 as our buy zone, and 85, 87, and we could sell failure to take out 99.50. And all day long, wasn't too keen on getting short, just because of where the market is right now, new highs. We said as long as we stayed above 85.90, this market could trade higher. So, our setup right here, a little Nancy's tweezers, good for a point. Little head and shoulders, good for 2. The retest failure right here, good for 2 if you traded it perfectly. Other 1 to 2 points. This S, just good for 1. Mean green trade, if you hung on to it forever, could have given you 3. But if you worked it down, 1 point, 1 point. Nancy's tweezers right here, 2. And we come up, get 1 to 2 points right here. So it's again, the market is really hampered by the lack of the other side. It's not a two-sided market, so we don't get. I mean, the traders will sell it and they'll take the market down a little bit, but they won't break it. Okay, looking at the F1 screen on the E-mini, higher low, higher high, find a place to buy it. That's going to be our posture. We don't have a super strong profile when we look at it all by itself, but if we put it together, got a very strong profile. So right now, while it is leaning B, my inclination is to be a buyer. We do have news tomorrow. Durable orders plus 2.5, ex-transportation plus 5. Now, if you come in and look at the numbers, core capital goods plus 0.9, we're starting to see jumps in here, and it's because of, I think, optimism has come back. We just see it all around. Things are happening. This guy Trump is moving at warp speed, doing stuff that we just did not even imagine possible. GDP plus 2.2, deflator plus 2.1. Consumer sentiment, 98.2. And Baker Hughes rig count, I don't have that. It was 1,036 last week. I expect to see this number growing a little bit more. At the height of time, it was over 8. At the height, the peak of oil production, oil over $100 a barrel, it was 1,800. So a little bit more room to the upside. So durable orders, ex-transportation, GDP, consumer sentiment will be the market's focused. 2,300, a close at 2,300 on Friday afternoon to send people home at the end of January, feeling halfway smart. That'd be pretty cool, wouldn't it? End of the next Tuesday is the end of the month, so I don't think you'll see any institutions bailing on the stock market, doing any heavy-duty selling. End of the month, compensation is tied to performance. They don't have a lot of incentive to get out there and sell. So, first sell failure, 95, 97. Sell failure to take out and hold 2,300. We can get short 95 to the buck with the right setup, but don't want to press it. Buy 91s to 89s. That's pretty aggressive. Buy 1. Then 84, 86, buy 2. Okay, not been a good week for auctions. In fact, the 3, 10, and 30-year auctions turned in a better performance. On a day-to-day basis, we had better numbers on those than we did on the 2, 5, and 7. We have to play the auctions every other week, so lower high, lower low. Look for a place to sell it. The market's in a downtrend. Trump has killed the gold and the bond markets, debt markets. I think the markets are a little oversold to the downside, but that sure doesn't stop them from selling. I do an I split right here because that's the auction, so you can see a very, very clean break in the market. It's really 123.28. So buy one will be 29.25 and 17 to 21. On the sell side, I think we could go higher, so we're going to put it 3 to 7, but it may take a 123.31 to get in. So we're going to try for higher in London, and then we'll try 11 to 15 for sell 2. If the market is weaker than I think, it won't quite make it to my numbers. If it's stronger than I think it is, it will go through them. We love our number 2 levels. That's where the money is. Doing an I split right there. We retested the auction at 18 to 19 while we are trading higher. 150 is a very round number. The low volume number is at 50.02, so we'll put the buck to 4, number 1, sell 7 to 11, and 15 to 19. I don't think the market's ready to explode to the upside given the auctions. Last rotate down stopped at 20, so 20 to 24 is number 1, 17 to 13 buy 1, 1 to 5 buy 2. But I think the world's absolutely amazed at what's going on in Washington, D.C. right now. All the protocol, all the reasons you can't do stuff, all the hemming and hawing and talking. It's been, get out of my way. We're going to do this, and we're going to do it right now. I would certainly never anticipate the speed at which these guys and the magnitude of the changes that they're pulling off right now. It's got to be eye-watering for the opposition. Looking at gold, lower high, lower low. No reason to own gold. Good times are almost here again. Certainly 12 to 18 months out. Going to get back to 4% growth. No reason to own gold. Well, inflation might be there, right? But if you look at the resetting and the reshuffling of the deck and everything, if internationally, if you can start to make some progress in the Middle East, if you can get cooperation out of Russia within their national interests, not going to take them away from that. If you get China to back down a little bit, the world will look a lot different than it did on November the 8th. And so I think the biggest reason gold has come down is India's restriction on private ownership and private purchases of gold. Gold says find a place to sell it. We do have a P. We have volume very, very low in the distribution. So 90 to 92 is resistance. 90 to 92, sell 1. 94, 96, sell 2. On the buy side, we'll leave it 84, 86. Give ourselves a little bit of room, but look for a test of 85 overnight. Buy 1. Low volume numbers at 81, so we'll make 79, 81, buy 2. Let them get stops beneath 80. One of the things we really key off of is known behavior of exchange members, known behavior of large off-the-floor, don't-own seed institutions. We want to execute and trade with the exchange members because they're in charge of price discovery. They're the ones that are going to do the probing. And we want to trade with the long-term paper. They're the ones that set the direction of the market. Take it higher, take it lower. And we see that through our volume splits. Okay, crude is defying gravity and fundamentals, but it does that. And that's what makes crude fun. Higher low, higher high. Look for a retest of today's highs anyway, 54 plus. So 54.50 on the F1 screen is where resistance starts. We've rejected prices above 54.50. On the F2 screen, it's lower than that. Do an A split. Pretty strong P, volumes above time, so we should expect a retest of 54. So 54 and a quarter, sell 1. Why that? It's where resistance is. Just simple. Just take that exchange member's attitude. I'm selling 54.05s. And if I'm right, I got a chance to make a lot of money. If I'm wrong, I'll lose a couple, 3 ticks, 5 ticks, what the hell. Start the game over. 53 and a quarter, 53.25, let them get probe a little bit lower. Get stops below 53.59. And then we'll do 52.75, 53 even for buy 2. Hope some of you are growing, trying to strategize a little bit, trying to put things into context, because that's really where you separate the men from the boys. The really good traders know they want to be long or short, and then they go find a level or price level that offers them an advantage. And that's where we're trying to get your thinking. We're trying to get you to think as opposed to react. Now, it doesn't mean you're right, but if your analysis is correct, you can really pile it on. You know, if you're a 1 or 2 lot trader, you can trade 2 to 4. If you're a 5 lot trader, you can trade 10 when you're reading the market well. Everything is in sync, and you're there. The changes that Trump are making, or is making, and are making daily in the United States, I mean, they're unprecedented. This hadn't happened before this quickly. And the magnitude of these changes, I mean, these are significant changes, and he's not screwing around. And that will make the U.S. economy stronger than Europe's. I saw where the forecast growth for the German economy this year is, I believe it was 1.6%. We've been howling about growth rates in that area, how bad it is for us. That's great growth for Europe. Lower high, lower low on the F1, find a place to sell the euro. F2. Okay, now we have a shape right here where the market, you see we had double test, that's the low in E and F period, that's when we expect it. Then we get short covering coming all the way up, and it stops at 71.18, 107.18. So we got a pretty good seller, 107.15 to 25 right in here. Got several breaks in the market. Right now we're at 106.96. Last rotate up, stopped at 12. So we'll make 7.10, 7.20, sell 1. Then we'll pick up 7.40, 7.50, sell 2. On the buy side, 106.75, 106.50. If we don't break it early tomorrow, end of the week profit taking will be the dynamic I think that we'll see. Anyway, that's my story, and I'm going to stick to it, as Rich would say. Okay, thank you all so much for coming in today and putting up with a couple of dental appointments this week. Time to wrap it up and end it. I will see you bright and early in the morning. Hope you all have a great evening. We're planning on it here. We'll see if we can shake that money tree once again tomorrow. I'm out of here.